Joining us now is Raymond James analyst Josh Beck, who currently has a buy on Meta, $600 price target. What has been driving the recent momentum here in the stock, Josh?
Well, thanks for having me on, Sarah. So, yeah, if you go back to the last earnings report, I think there was a lot of skittishness on behalf of investors on the guidance and the outlook. And certainly what the company had to say is that the macro is not really impacting their business, and probably more importantly, their use of AI for recommendation models, driving more time spent on the platform, is actually helping them drive a greater than expected share of digital ad dollars. So that's really been the primary driver of outperformance here. If you just kind of look recently, over a longer time period, though, we still think that Meta is underappreciated with respect to what they can do in AI. We have this dark horse thesis, basically with respect to Meta AI for consumers, Llama for enterprise, and also their Meta AI for business. We think there's almost $10 billion revenue in each of those that is not really in the stock or in the numbers.
Yeah, Josh, what are they going to do today, or at least what are you focused on in part trying to get some answers to, if there are going to be any, from today's events and tomorrow's?
You know, Zuckerberg's been out there more on the on the interview bandwagon, and he's very excited about these glasses. He recently said it could be one of the largest products of all time. Obviously, he's excited about it. So we'll learn a little bit more about that vision today. I think one of the key elements will be including the Meta AI assistants into the glasses, so they can be a little bit more intelligent, so that they can make sense of what's going on around you. And they're one of the few elements of Reality Labs, which is probably costing the business $5, $6, $7 hit to EPS, that's starting to work. So if this starts to play out, the glasses get traction, and investors start to feel like, hey, this could even be a break-even business, it would actually be very additive to the EPS at Meta, and would actually make it look much cheaper than the S&P.
Really? Where would the multiple get down to if, in fact, they get to break even on the glasses?
Yes. So if you look at the multiple right now, the total business is just a touch over 20 times earnings for 2026. If you were to strip out these losses from Reality Labs, it would go down to about 17. The S&P for 2026 is a couple turns higher than that. So it's one of these areas where if investors could just see a little bit of momentum, I think they could pretty quickly get credit for this. So it's a pretty important debate for the stock. And if you start to get any glimmers of hope, I really think it could help the shares.